Morning, Avinash. First up, I want to understand is the focus now likely to shift as we enter the month of April? Is the focus likely to shift now to earnings rather than what is happening in West Asia?
Yeah, good morning, Karthik. I think yes, I think numbers will be very important now. Quarter four numbers, along with the annual numbers, would be presented, and I think markets would look at the management commentary, the growth outlook, kind of data points, and most importantly, in the coming week, 6th April is the RBI policy Wednesday. Markets are broadly expecting a hawkish policy, and that definitely is not good news for the markets. Again, on the 8th, we have the FOMC meet. My sense is that clearly, these would be more important data points because as of now, Donald Trump has given a fresh deadline. He expects that by Wednesday, some sort of solution could come up. There are some news reports that mediators from Iran and US are working, for a 45-day kind of a resolution. So, these things will keep happening. But I think now the focus would be, as you rightly mentioned, on the corporate earnings, on the data points. Already business outlook commentaries by many companies have come out. We have seen a lot of banks, manufacturing companies put out the quarter four kind of outlook commentary to investors, and I think these would be crucial data points because the markets would now be guided more by numbers rather than the narratives, and obviously what kind of growth outlook these companies share, that would decide the future momentum.
So let's take these one by one. We will come to the growth outlook in just a bit. But first up, what you were mentioning, very important point of the RBI Monetary Policy Committee meet, which kicks off today. And you're saying that the RBI is expected to take a hawkish stance, which means interest rates are likely to go up. But how do you feel about the stance that the RBI will take? Because some understanding and some reportage also suggests that it's going to be a neutral stance. Policy rate is largely going to remain unchanged, but RBI is going to keep a watch closely on inflation figures. So do you really expect RBI to cut interest rates already while inflation still continues to remain benign?
No, I think, see, as far as interest rates are concerned, maybe they might wait for some time. Probably, they could wait for the monsoon to get over. I think, probably that would be a better indication. And by that time, hopefully, the geopolitical situation could have also got completely, positive. But I think the commentary from the governor is now going to be very crucial. I think what he mentions as the growth outlook and the commentary would be obviously be read into more closely by the markets. And I think that is very important. So, Karthik, numbers may not change. The numbers may remain neutral as what was earlier. But the growth outlook commentary, the outlook which can be shared by the governor, I think is something which I think the markets would look at very closely. And this is something which the markets would take a very conscious call. So, we'll have to wait and watch. But I think there will be some cautious stance in the governor's speech this time.
Caution expected. Now let's talk about earnings, and let's also in fact talk about some stocks in news. And there was this indication that HDFC Bank was likely to open higher today after we saw the Q4 gross advances were up 12%, and the company's AUM has also been reported up by 10%. But what we are seeing this morning are again some cuts in the HDFC stock. In fact, HDFC stock is trading about 0.25% down this morning. What is your view on HDFC given all that we've seen unfold over the last 10 days or so? And of course, we are in earnings season right now. How do you see investors who have positions in HDFC Bank?
Yeah, I think Karthik, longer term, the bank, because of its size, is definitely going to do well. And I think, what happened in HDFC Bank, that the chairman resigned and had some differences with the board. This event was quite unfortunate and unexpected and took the markets completely by surprise. So, these are events which could not be visualized by any analyst. And I think, the markets would now wait for Q4 numbers. The business outlook given by the bank is definitely encouraging, very positive. But I think the bank has got to move fast. I think what the market wants is faster growth, and obviously on a higher base it looks challenging. But definitely, I think at these levels, HDFC Bank, most of the negatives are built into the price. So I think somebody who's looking at the next 18 to 24 months, a long-term kind of time frame, can definitely chip in.
All right, and you're talking about more aggressive growth. That is something which is visible on Axis Bank, which has reported an 18.4% growth in gross advances for the month of March 2026. In fact, the Axis Bank stock is up about half a percentage point today. What is your view on the stock?
So I think positive. I think these numbers are definitely going to excite the market. I think clearly Q4 is going to be a very strong quarter, and I think hopefully if asset quality is good, and I think what kind of growth commentary comes in, because most of the banking stocks have been volatile and have come off from their highs largely because there have been some fears that if the Iran war continues, then there could be a lot of margin pressure, there could be a lot of raw material kind of cost increase for corporates, and that could elevate the asset quality levels, for corporates where banks fund these companies. So I think it's better to wait and watch. But yes, Q4 should definitely be strong. The outlook going to be shared post the Q4 numbers is now going to be very important.
Absolutely, all eyes on that Q4 number. Meanwhile, positive news also coming from Vedanta, which has reported a 2% increase in its aluminium and a 5% rise in zinc. And again, that is something which is reflecting in the stock price this morning. In fact, Vedanta stocks are up about 2.5% or so. A lot of news around Vedanta also, including buying the distressed assets of JP Associates. Your view on Vedanta this morning, Avinash?
Yeah, I think Karthik numbers have been pretty stable, but I think this Jayaprakash Associates news item is something which I think I don't think the markets would take it positively or maybe negatively, because clearly that's a deal which has already been finalized with the Adani Group. My sense is I know the markets would now look at the near-term trigger for Vedanta, which is basically the management has gone on record mentioning that in the month of April, hopefully the company would be split into five separate companies. That would be the big trigger point, because that would help the company plan its debt as well as its balance sheets in a much better manner. So my sense is, this could be a bigger kind of a trigger, at least in the near term for Vedanta. But net, I think structurally, I think metals are in a sweet spot. We should expect a decent year for the coming year also.
All right, expect a decent year in the coming financial year as well. Let's shift focus now to the automobile category. And again, news coming in from Bajaj Auto over the weekend that there was a 20% year-on-year rise in its two-wheeler sales for the month of March, now standing at 4.5 lakh units. In fact, Bajaj Auto is the only sort of outlier in the auto pack this morning when you look at the Nifty 50 companies. All other auto stocks are in deep shades of red except for Bajaj Auto, which is trading about 0.6% or so higher. Your view overall on the auto sector and specifically on the two-wheeler category?
No, I think Karthik two-wheeler category has been doing quite well. Rural demand is back. GST cuts have also ensured that demand is growing, and I think you're going to see a very strong quarter from most of the two-wheeler companies. As far as the CV sales are concerned, tractor sales are concerned, utility vehicles are concerned, passenger cars are concerned, I think these are also segments which are going to do quite solid growth in FY27. Apart from that, my sense is, the auto component companies which cater to these segments are also going to be in limelight, because obviously once the OEMs do well, the auto component companies also will do well. So I think this is a sweet spot, despite the fact that crude prices have gone up, but I think demand on ground is still continuing to be quite positive.
All right. And finally, what about the oil marketing companies? Because again, we are seeing all hues of red across the entire energy pack this morning. I want to specifically understand HPCL, BPCL, IOCL. With rising crude prices, their margins are hurt and are likely to remain hurt as long as election season in India is on, given the fact that they may not be allowed to increase fuel prices. Meanwhile, we are also seeing that Reliance Industries, which is usually a beneficiary of rising crude prices, is trading lower. In fact, deeper cuts seen from the open data. Now Reliance Industries down by about 1.8% or so. Other oil marketing companies also continue to reel under this pain. IOC down about almost 2%, BPCL down about 1.6%, HPCL also down almost 2%. What do you make of the energy park? Because we understand that the war is likely to continue to keep the oil prices elevated.
No, I think in the near term, as you rightly mentioned, Karthik, the oil marketing companies will be under pressure. Maybe the fourth quarter will not be that bad, but April to June is a quarter which is going to be very crucial and may see a little bit of margin pressure, as crude prices, which have got elevated, will obviously depress their gross refining margins. My sense is that the government is making all around efforts to compensate the oil marketing companies' efforts, but if crude goes above 140, 150 a dollar a barrel, then I think that's definitely not good news for these oil marketing companies. And I think that would also be impactful for many sectors like aviation, lubricants, chemicals, carbon black. So, that could definitely have a spiral effect on the cost pressure for these companies.
All right. Of course, cost pressure is something that one will have to keep an eye on even as we enter the next quarter. Meanwhile, for investors who are beginning their investment journey right now, Avinash, or for those who have continued to stay invested over the short term or the long term, the recent history over the last one quarter is giving very mixed signals because Nifty 50 has corrected by almost 15% from the 1st of Jan to the 31st of March. On the contrary, gold has, despite a fabulous 2025 calendar year, gold also in this Q4 in India has returned a positive almost 11.4% to investors. Silver returning in the green but not as high as gold this year. In fact, up about 5.3%. Fixed deposits continue to give you a 6% to 7% average rate unless, of course, RBI goes ahead and increases its interest rates, if not in this MPC, maybe in the next. Meanwhile, government bonds, the 10-year GSEC yield is also up by about 6% from the 1st of Jan to the 31st of March. Overall, investors, retail investors, looking at these sort of mixed signals, looking at this uncertainty in the stock markets and even in the commodities as well as the precious metal market, what should their strategy be for this financial year FY27? How should they rewire their investments, Avinash?
So I think my sense is that investors should, obviously measure their risk appetite. But I think for a investor who's got a reasonable risk appetite, I think he should allocate a higher portion to equity. My sense is that, once the geopolitical situation stabilizes, I think you're getting very good quality stocks at reasonable valuations. I think sectors like automobiles, auto components, hospitals, hospitality, for that reason, domestic facing sectors are definitely going to do well. And I think you need to create a basket of large cap and mid cap stocks, maybe 65% of your portfolio. And the rest 35% could be put in maybe debt or maybe, gold, typically to take advantage of these asset categories. But I think this is a year where one needs to increase their allocations to equity because equity assets are definitely looking attractive. And once geopolitical situation improves, I think you're going to see a sentimental positive impact on the market. So I think you need to create a long-term portfolio, do an SIP, which is better. And I think most importantly, keep a time frame of at least 2 years plus so that, you can generate a decent risk reward.
And will your sort of recommendation change if it were a reality that some people out there, in fact on social media, some experts pointing out that India could potentially also be looking at a bear market? So if that were to be the case, if the war in West Asia continues to be a prolonged one, and if there is imported inflation that India also gets in, revised sort of, growth ratings coming from rating agencies, if India were to sort of be in this bear grip, would your recommendation still be the same?
Yeah, it would be, but I think continuation of the war beyond say 2 to 3 months is a remote possibility because today financing a war, Karthik, as all of us are aware, it's a very expensive affair, and neither US neither Iran can afford a very long war. So my sense is that we need to keep our fingers crossed and think positive. Hopefully, let's look at it that the war does not continue beyond 3 months, and then things could be normal. But if it continues beyond 3 months, then I think yes, the corporate earnings and the inflation, all these things would hamper the kind of earnings growth, and that definitely could obviously impact risk-adjusted returns for most of the investors. So that is a risk which we need to take.
All right, that is the risk, and that is the risk-reward ratio that one will have to keep in mind. Avinash Gorakshakar, always a pleasure having you here with us on Newsline. Thank you so much for your time.